Hi, boy, these numbers, once again, remember, a month ago, soft sentiment from Michigan was one of the reasons the markets moved. It continues. These are preliminary March read, University of Michigan, expecting the number 63, 63 and a half, 57.9. That's the weakest month-over-month headline sentiment going back to November of 22. Last month's was going back to November of 23. And if we look at current conditions, 63.5. Weakest since September of 24. Expectations, 54.2. Weakest since July of 22. And I thought the jump last week in one-year inflation at 4.3 from 3.3 was a misprint. It continues to move higher. 4.9. You have to go into the Wayback Machine to find a higher number, and that would be 5% in November of 22. 5 to 10-year inflation, well, if we look at last month, it went from 3.2 to 3.5. That was the highest since Dec of 93. It continues to move higher. 3.9%, 3.9. To find a higher number, I'm really going back. You have to go back to, get this, February of 1993. 1993 to find a higher number than 3.9%. Now, given surveys are squishy, and many are debating whether there's any political bias to Michigan surveys. But having said all that, I've been monitoring this for years. These are some of the biggest month-over-month changes to the downside I've seen in a while. Interest rates haven't moved a lot. Many suspected we'd continue to see this. Why? Because whether it's sentiment or the nervousness in equities, in many ways, they co-feed off each other. And the volatility in equities have continued. So does the downdraft on these surveys that in many ways are focused on some of the negative aspects of equity trading. Back to you.